Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at two support lines for Bitcoin, which over the last 15 years have proved to be important and relevant, and why we need to pay attention to them now. We'll have a look at the wider markets to see exactly which direction the markets want to go and how it's going to affect the Bitcoin price. We'll have a look at what the larger timeframes are telling us about Bitcoin, as well as the 60-day cycle, which is telling us what's going to be happening over the next few weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So always please do your wider research before you make any investment decisions or any swing trade decisions. Okay, so what are these two support lines that have been actually giving us a lot of relevant and important support for the Bitcoin price over the last 15 years? So on this chart, it may look confusing, but there's incredibly important information contained here, and we need to elicit that information to help us make sense of the Bitcoin price currently. So we're going back here to the first halving back in 2012. I've got the pi cycle on here, which is the red line and the green line, the 350 simple moving average, the red line, and the 111 simple moving average, the green line. And you can see that with the settings here. This is the style, this is the input here, 350 against the 111. The red vertical line is the halving, and the yellow line is the top of the market here. And the two support lines I'm talking about is the green line here and the orange line. So the story on this chart is that we bottomed out at the end of this bear market. Once we'd bottomed out here and recaptured the green line, you can see that we found support mostly along that line. And when we did break it, we found support on the orange line here. And those two supports held firm all the way to the halving here. So you can see that all along here we didn't breach the orange support line. But if you continue on this journey after the halving, you can see that the price never breached the green line or the orange line, and where the green line crossed the red line was the peak at that time over here. And where they crossed later on one more time, that was actually the top of the bull market. So the green line crossing the red line is incredibly significant and has been since the inception of Bitcoin back in 2009. So very important when these two lines cross. So if we go to the second halving, okay, a similar story unfolded in the second halving. We came to the bottom of the bear market. We found support around that line here. And then if it did break, we found support on this orange line all the way up to the halving here. And this story continued all the way up to the top of the bull market in 2017. And where the green line crossed the red line, this was where the actual top was. So this is an incredibly powerful exit indicator as well. So while the green line is a very good support, the orange line is the second net for the price. And you can see we don't breach that orange line. That's the support line that gets established from the bear market bottom. And as you know, we've been talking about the red line and how the price before the halving always comes up to the red line. And if we go to the third halving, exactly the same story, bottom of the bear market, we recapture the green line here, and then we find support all along here. But when we do break it, we find support on the orange line. And this is that COVID situation which we just have to put to the side here. So one more time, once we recaptured that, we found support on the green line and the orange line all the way up to past the halving here. And one more time, the green line crossing the red line was the actual top at 64,000. And we mustn't forget the fact that the price came all the way up to the red line one more time here before the halving. And that brings us nicely to the upcoming halving in April 2024. So the story so far seems to resemble exactly what's happened in the first three cycles. So we've had the top here at 69, came back down, the bear market. We've recaptured the green line, and for most of it, as you can see, we found support all along here. And when we break it, we find support on the orange line. And we're coming up to the halving at this point here. And so far, we're finding support on the green line one more time. So the question is, will it break the green line? Well, it's anybody's guess, but we know that there is the orange line here that will find support. And that at the moment currently is anywhere around the 32 and a rising line here. So yes, 32 is still on the table should we break the green line. And the reason why I'm showing this is that I've been watching quite a lot of the YouTube videos, and just to gauge people's response to the current price action, I've read quite a number of comments where people still think that we're going to come back down to around 20,000 and 12,000. And I wanted to reassure people, just based on the facts in the charts here, from what's happened on an historical perspective, that that is unlikely to happen. That 32 is probably the lowest price that the Bitcoin is going to go to. And we still have our narrative that the red line, where the price has actually come up to before the halving, at the moment it doesn't look like it's going to happen. So this will be the first cycle where the price hasn't breached the red line. But as we know with Bitcoin, anything can happen. But the important information to elicit from that would be that if the red line carries on like this and the price doesn't come up to it, that's telling us that this is not going to be a left translated cycle, but a normal 4-year cycle where we're going to be going towards this top, anywhere around here, between 70,000 plus. So we have a journey of 2 more years to go. And even more important than that is the location currently of the green line and the red line. As we've seen in the last 3 cycles, for us to get to the top here, these 2 lines have to cross somewhere. So we're hoping it's going to cross somewhere around here, around about this level here, anywhere around the 100,000 hopefully, or even more. The main thing is to keep an open mind and let the market tell you where it's going to top out. So where the green line crosses the red line, based on the historical perspective, would be telling us that that is the actual top for this bull market. So a lot of important information to elicit from that, and also why we need to pay attention that if we are thinking of actually waiting for the price for Bitcoin to come down below the 32,000, then these charts are telling us to think again. And this is the main reason why we have to take this 4-year cycle very seriously. We have the same story playing out time and time again. And since the market bottomed out here, we've been on this 3-year journey to the end of the bull market, which we expect at the end of 2025. And we have 2 more years to go. And with that strategy, you have to take the rough with the smooth, i.e., while we want to ride the highs and see our portfolios go up, we have to be prepared to ride the lows and see the portfolios go down. And this is going to happen time and time again. So there's no need to worry when you get these oscillations, because our real objective is to get to the end destination, because it's only at that point that you cash out. We're not cashing out anywhere around here. And that would seem a bit foolhardy if you were to do that. But to get to over here, you require a huge amount of patience and endurance, because those 2 qualities, if you lack even one of them, will prevent you from actually getting to this point here and cashing out. And I want to actually share 2 of the most powerful quotes you'll ever come across. And these are 2 of the greatest traders in the history of investing. The first one is by Warren Buffett. And it's a very simple but incredibly important quotation that if you don't find a way to make money while you sleep, then you will surely work until you die. What's underlying that is patience and endurance, i.e. doing nothing. In a bull market, doing nothing makes more money than trading every day. And this is what the second quotation tells us. And this is by Jesse Livermore, one of the shortest and most powerful quotations for making lots of money, is that money is made by sitting, not trading. And if people can just abide by those 2 qualities, and that will give us the greatest chance to get over here and cash out. The problem is that people will lose patience along this way here. And I've noticed from the comments we get from time to time, people expressing negative sentiments and people waiting for lower prices, trying to time the market. All I would say is that for me anyway, and I can only talk about myself, I'm not telling anybody to buy anything or sell anything, but my own feeling is that it is more riskier to be out of the market now that we're approaching this halving, from which we always get a parabolic rise afterwards. It's more riskier to be out of the market than in the market. And anybody waiting for lower prices down here may well be disappointed. In fact, there is a third quote which confirms exactly what I'm just saying here about sitting tight. And this is by Edwin Lefebvre, another great trader. And he said simply, "It was never my thinking that made the big money. It was always the sitting tight. So doing nothing in a bull market and not having the urge to trade, the urge to meddle, that is what really makes the money. And while I believe that that is exactly true, I think a slight modification to those rules would bring it up to date. And that is that if you have a portfolio and you make 90% of it where you do absolutely nothing, so you're protecting that majority of the portfolio for the duration of the bull market, which allows you to ride the ups and the downs along the way. However, having 10% for the swing trades, especially in a volatile environment that we have with the Bitcoin miners, and we've proved over a number of trades during 2023 that you can actually get ahead and add to that long-term portfolio by having a 10% element just doing the swing trades. And there is another method of actually adding to the long-term portfolio which doesn't take you out of any positions simply by swapping one asset with another within the portfolio. So this is where I differ a little bit, that 90% absolutely perfectly fine, don't do anything and just keep riding this along the way and sit tight and make money while you sleep. And the other 10%, you can actually make intelligent decisions by using intelligent methods to add to the long-term portfolio, which is riding the ups and downs along here. Okay, a quick look at the dollar. And last week we printed this gravestone doji candle, which in the past has always brought the price further down. And I mentioned this last week, but what happened on Friday is that we got a bullish engulfing candle over here, and that invalidated this gravestone doji candle and is now pushing the dollar to much higher levels. So while we expected the dollar to come back down, it looks like it's going to get rejected at this point here. This is the next resistance point as per the historical charts here. So let's see what happens here. But certainly no wonder the market was coming down on Friday. But if you just look left from here, there is a resistance point exactly where we are currently. So there are 2 points of resistance, one based on this point here and the other one on this point here. So it may well be we come back down from this level or go a little bit higher and come back down from that level. But you can see that we are on a lower highs being made all along down here. And that should be very good for the markets. Moving on to the Russell 2000, we are at this neckline as I mentioned last week. And since then, we're coming back and retesting that neckline one more time. And if the dollar does come back down this week, then we can expect this to move up to the upside. And that should be very good for the Bitcoin miners as well, which tend to correlate well with the Russell 2000. And as I've been showing you for the last few weeks now with the SPX, we came up to this neckline here, but along the way we had made this cup and handle pattern. And we're now breaking up above this neckline. And this is the start of today's candle for the new week. So let's see what happens, but certainly this would suggest that we're going to be moving to much higher levels on the SPX. Okay, moving on to the 60-day cycle, we are currently on day 56, as you can see here. So we're going deep into the 60-day cycle. We've made a low along the way at 38.5, and we would have expected some sort of a follow-through into the 60-day cycle here. And obviously that hasn't materialized because the market has actually just pushed up. And the fact that we haven't broken through this level and we've gone back into the range bound between the 45 and the 40, going deeper into the 60-day cycle would suggest that the market has no appetite for coming down much lower. That doesn't mean it can't come down, but certainly reduces the probability of doing so. And another very important development in the last couple of days, we have this trend line all the way back from here, incredible support all along there, and then we found support one more time. Having broken that, we came back up and found strong resistance. But when we broke up above it, it looked like that we were going to go to much higher levels. But you can see one more time here on Sunday, yesterday, it broke through and actually closed below this line. But we can see we're trying to recapture it in today's green candle here. So let's see where that goes to, but if we can recapture that going into the 60-day cycle or towards the end of it and still remaining within the range of the 40 and the 45, showing no signs that we're going to come back down to this level yet, that would be an incredibly bullish move going into the end of the 60-day cycle on a high rather than on a low. So we'll just have to wait and see how it develops. But as I mentioned earlier, that 32,000 is still on the table. Whether it does that now or in the next cycle. We have to wait for that. And we also know from the end of the cycles that many times you can get a rapid fall into the 60-day cycle like we got here, and another one we got into the 60-day cycle here, and another one over here. So the end of the cycles can prove to be rapid falls in order to create a low for the start of the new cycle. So this is something we have to be aware of, because as I've mentioned over the last few weeks, that we have got a failed cycle having made a lower low over here. So there are definitely bearish undertones within this price action, but the fact that we've been able to move from these levels and not had a follow through, and instead we've had quite good bullish action up to this point here, virtually above the trend line, tells us that there is a lot of buying up as well. So there's a real tussle going on between the bulls and the bears. And as we'll see on the weekly chart, why this action here over the last few weeks has been incredibly bullish just based on the candlestick pattern, but certainly overall holding strong here. But if we move to the weekly chart on a higher time frame, it gives us a clue as to what may well be unfolding here. So if I was faced with a chart just like this without any lines, and it could be any asset here, the first things I would look at is where the bottom is over here. So we've got the support at this point, and then you've got these very strong resistance points and support lines here. And just observing this pattern would tell you that we've got an inverse head and shoulders, and then you have to get your ruler out and measure from here to up here at the neckline. And that gives us a 63%. And I remember doing all this on this channel all throughout 2023 when we had bottomed out here and doing this measurement and saying at the time that of what this inverse head and shoulders is telling us. So 63% from here takes us to around about 41,000. And you can see clearly this is exactly what we are at here at 41, 40 and the neckline at the 45. So this pattern was giving us a very strong clue as to where this price action was going to go to at least. But along the way, we've got other support and resistance points. And this one being one of them here, you can see quite clearly at these lines, at 32,000, you've got another support and resistance. And this is exactly where we have the 32,000. So this is on the table as an option for Bitcoin to come down. But I have a very strong reason why I don't think that can come down, because the higher probability is actually giving us a clue by this candle here. So the bottom of this candle, you can see, is at the top of these candles here. So that's telling us that we've stair-stepped up to this point, gone up to the 49,000, come back and used this as a support, and now we are bouncing up here. So that's the first point. And the second point is that, as I mentioned last week, that this candle is a hammer candle, and you usually find them at the bottom of a trend, and these are reversal candles. So these are the points where the price tends to bounce back up from. And many people mention that, what about this red candle here? Yes, that is incredibly a bearish candle, because what we've got is a rejection of higher prices, and then we had the follow through with this red candle. But what we've got with this hammer candle is a reversal and an invalidation of the red candle here. So that red candle is now been invalidated by the bullish action we've had over the last 2 weeks and today's action here so far. So this is what I'm reading into it, that while we've got the range here of 45,000 and the 40,000, as long as we remain within this range and going into the 60-day cycle, the end of which is around 9th of February, the probability is, based on what I've just explained here, that we're going to go to the top of the 45 and break up from there. That's the higher probability, while understanding and accepting that this range here at 32 is still on the table. So in a nutshell, if we break the 45, we are bullish, and if we break the 40, then it's a bearish move down to the 32. So this is how I see it, and we must always remain neutral and fluid and flexible, never get sucked into one story or the other, and then respond accordingly. And our Pi cycle is telling us that so far we're finding support on the green line here, but I showed you the support line that we've got so far going into the halving, that is unlikely to break below that, and as I've shown you, that's the 32,000 down here. So that's on the table but the probability is to the upside. And people always ask me about my strategy of what I'm doing, and it's the same strategy that I've been following since the end of 2022, and that is to keep dollar cost averaging at the lower levels whenever there is a dip. And for those people who've been watching my channel for a while will know that I don't buy Bitcoin, I don't buy Ethereum. My interest is focused on the Bitcoin miners. So my overall view here is that on balance, 60 to 40, I'm expecting the market to go up to the 45 towards the end of this cycle and to move higher. And currently the Bitcoin miners in the last few weeks have been actually providing a 50% discount to the high prices over here. So while Bitcoin has come down from the 49 all the way down here to around about 20% fall, the Bitcoin miners, represented by Marathon here, came down by 53%. And I use a method called the ratios method, where I actually move from one Bitcoin miner to another one whenever there is an opportunity based on the ratios method, where I go through in the private member section of this channel, where we cover the Bitcoin miners exclusively. So in the private member section, I use two methods to actually add to that long-term portfolio that I talked about earlier on, which I will be riding until the end of the bull market. So in the long-term portfolio with the Bitcoin miners, which I'll show you in a minute, we started dollar cost averaging at this point. We caught the right at the bottom of that bear market here. And since then, we've just been holding that as a passive portfolio along the way. So yes, we've ridden it up, and yes, we've ridden it down. Yes, we've ridden it up and down and up and down, and we've now got to that point where we've now ridden it back down to this point. But guess what? The point here is much higher than this point there. And that's the beauty about the long-term portfolio and following the greatest traders like Jesse Livermore and Warren Buffett. By sitting on that portfolio and virtually doing nothing, except in that 10% portfolio of doing the swing trades. Currently, we're not in any swing trades, because we're waiting for the signal from the 60-day cycle. But what we have been doing is using the ratios method, which within the 90% of the long-term portfolio that we've been riding here, with the intention of going on this journey towards the end of the bull market here. This is where we're expecting. The price can be anywhere around here. And the fact of the matter is we don't know what the price is going to be. And in the absence of that, it just makes sense to keep on riding it, because we are making higher highs and higher lows along the way. So while it's painful to ride the portfolio down, it's actually very exciting to ride it up. But with that patience and endurance, we're going to get to this point somewhere along the line and be in a position to cash out. This is our objectives and intentions. So what is the ratios method, I hear you ask? So this was our passive portfolio for 2023. And just by leaving it all alone within these assets that we got, i.e. the Bitcoin miners that we invested in during 2023, we started off with around 100,000, the target of $1 million, by the end of 2023 or at the halving, and we ended up 2023 with this amount here at 434 from a starting capital of 110, and that represented nearly 300% over 2023. So while everybody was still in the bear market mode, we started this portfolio on the 6th of January, the first week of 2023, and currently we have our new portfolio of 2024. And we have two portfolios this time. One is the passive portfolio, which should emulate the 2023 one and get to similar results here. And this time we have a target of $5 million. And you're probably thinking, well, that just seems incredibly excessive. Please remember, the next 2 years, we will be encompassing the parabolic rise to the end of the bull market. And with the Bitcoin miners, we have the leverage play, which can be anywhere between 3, 5, 10, or even more as a multiplier to the Bitcoin price. And if we got to the $5 million target, that would represent a 45x from the start of the portfolio back in January 2023. But this time around, what we've done is to actually spice up our portfolio by using a method that in my own private portfolio I used called the ratios method, which instead of giving me 300% profit at the end of 2023 was actually nearly double this amount just by using a very simple method called the ratios method, which just involves going from one Bitcoin miner to the other at the appropriate points based on a range which has been elicited from the charts for the Bitcoin miners. So in the private Bitcoin miners member section, this year we're going to be comparing a passive portfolio just like what we did in 2023, but we're going to compare this with a trading active portfolio based on that ratios method. So we're going to compare the passive portfolio where we do nothing at all between now and the end of the bull market, and spicing it up with a active trading portfolio simply based on the ratios method of adding to our long-term positions. So just by using a differential between the different miners, and if you're a foreign exchange trader, you'll know the ratios method, you'll call it the pairings between two different currencies. So like the pound and the dollar. So very similar to that, we see the Bitcoin miners moving up and down against each other over a period of time. And the reason why there is no risk involved is that at any one time, whenever you're doing the swap, you're selling one and buying the other one immediately at the appropriate tops and the bottoms of those ranges. So far we're at the beginning of this journey of trading the ratios, and like I said, in 2023 I did that in my private portfolio with a lot of success, and for that reason I'm sharing it with the private members in the Bitcoin miners section. We've done one trade in the last week or so which gave us 872 extra Riot units, which at Friday's close was worth around about $9,500. So we aim to do all this all along here throughout 2024 right up to the end of the bull market, hopefully in 2025. If you want to be a part of that, if you want to be part of that journey that we're on with the passive portfolio, with the ratios method, as well as the swing trades, if you want to join us on that journey for the next 2 years, so all you have to do is click the join button here below any of my videos, and you have to ask yourself, is the price of one coffee per week worth that journey? And if you say yes, then you can join us in the private Bitcoin miners section. Okay, so we'll leave it there. I hope you found value in the video, and just to remind people about patience and endurance, this is the journey we're on. It's not long to go, so please keep your patience, have the endurance, and keep the focus on this point here at the end of the bull market. And the biggest enemy that we have is being distracted from this journey here, and I hope you're not going to be one of them. And if you have found value in the video, then please remember to like and to subscribe if you haven't already done so, and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.